Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, June 9th, 2008. Well, as we get into today's video, folks, we're going to touch on a bunch of the different issues that were affecting the market last week, and we're going to see how did they play out today, and how was our judgment of being in a neutral position with slightly favoring the downside over the coming days to weeks going to change over the next month or so, and how did it affect the markets, or did we call it right for today? We're going to take a look at the overall market, oil, gas, you name it. We're going to look at it and see what we can see today. Alright, so let's get started in the markets today. We saw the Dow and the S&P slightly to the upside, while the NASDAQ was slightly to the downside. Now, you guys know that were with us last week in these videos. We, as of last Wednesday, had gone to a neutral bias with a slight favoring to the downside until options expiration, which is a week from Friday. So again, keep that in mind, folks. We are at a neutral position with an overall slight favoring to the downside through options X. Then we're going to start to look for that next turn date coming in the markets as things get started to roll. Now, why are we at a neutral position? Because that's a great question. I'm sure a lot of people would want to know that. Well, we knew the market was going to fall last Monday, Tuesday, Wednesday. The question was, we saw increased signals of major volatility coming into the market after Wednesday. So you got that nice push down, and then we saw that increased movement in volatility. Now, what does that mean? Well, it means that the market's going to be up and down in every which way and just off the wall. So what that means is you have to go to a neutral position, because as we saw Thursday, we had a ginormous rally, and then Friday the markets reversed that rally and closed it out much, much lower. And then again today, intraday, if I'm going to show you the intraday chart, we had a big sell-off in the early afternoon hours, only to rally back quite a bit into the close and actually close the markets about flat to slightly positive. So the volatility is there, in which case, if you're trading as a swing trader, meaning you're holding overnight for a few days to a week or a couple weeks, you got to be careful in this market, because you're going to get whipsawed. Those of us that are traders know you have to use stops, and in a volatile market like this, it makes it very tough. So keep that in mind, and that's why we're in a neutral position, because we do expect continued major volatility in this market with a slight favoring to the downside, meaning that we do think that we'll see a little more downside, but we're not foreseeing anything major going on. Nothing, a continual maybe 5 or 6 day drop like we've called for and been correct on over the last couple months. Alright, so we're going to talk a little bit about the charts, and we're going to get right into the intraday here, and I want to show you this chart. But number one, just want to make sure everyone's alerted to the fact that on Saturday, this coming Saturday, there's going to be a webinar at InTheMoneyStocks.com. It's an online seminar where you log into a room, you see our screen, you'll see the charts, we'll go over the charts, you talk to the trader live as he's instructing you on how to evaluate charts, evaluate the charts, and understand the technicals, price pattern, time discoveries will be unveiled there, and so forth. So sign up on InTheMoneyStocks.com under the webinar page. Alright, now here's where the volatility really got started, guys, and you guys can see it right around, I said, early afternoon, and that's exactly where it started. So early in the day, the markets were kind of just trending. Nothing major, nothing big up, nothing big down. But right around 1 o'clock, you see 1300, which equals 1 o'clock. You saw the market start to dump out, and it was a pretty substantial dump. You had the NASDAQ as much as 40 points down at the lows. It was even a little more than 40 points right down here. And what happened, we had a big bounce here, and then a reversal, almost a double bottom, but a nice W pattern formation. And again, you always buy that double bottom. Ideally, you want to see it pierce a little lower, or even go lower than this side, but nonetheless, that's a viable double bottom, and then a rally into the close. And really, the NASDAQ was down over 40 points, and just in this last little period, really from 2:45 to 3 o'clock, closed only down 15 points. So it rallied back about 30 points or so in that last hour and a half, hour and a quarter of trading. So nonetheless, a very nice move in the markets over the later stages of the day. And as I mentioned, the indexes closed basically flat. You had the Dow and the S&P up slightly while the NASDAQ was down slightly. And now there was a lot of talk about Apple today. Apple had the big conference call where they were going to unveil the new iPhone, the 3G iPhone. Well, Apple was one of the most volatile tech stocks, and look at these jumps in this stock price. So right around here, which was a little after 1 o'clock when they really started getting into that conference call, and the volatility here was unbelievable. For a stock that is as big as this, to see jumps in the price of basically 175, 75, a low down here, and just a couple, 30 minutes later, a high of 184, was just unbelievable. And then a reversal down again back to 176 just 20 minutes later. The volatility was unbelievable, and that's a lot of the weakness in it was in Apple, in Google, Baidu. Research in Motion was actually rallied towards the end of the day. Amazon was about flat on the day, but Google, Baidu, and Apple really made up for the tech weakness out there, guys. A lot of tech weakness today, and which is we've not seen lately, and that's to be expected. Tech has had a monster run, guys. You have to take profits off the table when something runs at large amount, just like technology has, and then you look for a re-entry on a pullback. Or those of you that are just like long-term holders, just hold, hold, hold. But that's not my style. I don't do that. I look for the big push, and then I sell and wait for a 50% retracement and buy again, and I make that spread on the 50% on the way back up, and then it goes higher and so forth. So that's one way of doing it. Financials today, another area of weakness. Goldman Sachs continues to get hit. This is Goldman Sachs chart. This is the #1 financial player out there, and it just continues to be nailed to the proverbial cross here. As you have a major, this chart doesn't even look like any indexes we've seen. Just constant selling in it, and this is the strongest of them all. Look at Lehman today. Lehman had news today. They basically are getting $6 billion. Excuse me, that's $billion infusion. Lehman got killed today as they had to basically sell their soul for that. And nonetheless, it closing down about $2.81 today on massive volume. UBS, let's look at UBS, down 81 cents. We've shown this chart a lot. And remember, guys, 2 weeks ago, when this market was at the near-term highs, double topping, we said, guys, watch this come Monday. And Monday was last Monday. Something's wrong here. Financials are not acting right. No financial chart looks like it shows any signs of strength here. This market's going to get hit, and sure enough, look at what happened last week in the markets off of that call. So it's just analyzing the charts. It's just understanding the price pattern and time, and a few of these other discoveries that we've made. And I do encourage you all to come join the webinar. $4.99 for a 5-hour course. Just unbelievable. You'll walk away right away as a better trader, no doubt in my mind, as long as you pay attention in that webinar. All right, folks. So nonetheless, unbelievable how the financials have been getting nailed these last few weeks, and it just continued today. No mercy for Lehman. Merrill Lynch, another one, got just killed, down $1.26 today. And we're talking about major double bottom areas here from when Bear Stearns happened. Look at this. That's a double bottom, guys. The question is, does it bounce? Does it hold? Does it break down? And we're going to have to wait and see, and we'll continue to evaluate. Look at the volume increase here. This is also a negative sign. All right, when your stock price is going down, if you're looking for an entry, what do you want to see? You want to see volume getting lighter. You want to see less and less selling. Here we've seen the opposite. You see more and more selling as the stock price ticks down. The same can be said for Lehman, and look at what happened to Lehman today. Look at this volume here on this move, and you can see compared to over here where it was going sideways, a increase in volume like that, the price is going down. That's not a good sign. Now, eventually these financials will reach a bottom, but hate to break it to you all, but I'm not one that can stick my head out at this stage of the game yet for these financials. If you're going to ever take a chance with a financial, you got to look at the XLF, because at least it's made up of all of the, a bunch of these the financials make up the XLF, and this way you don't have any specific company risk in case one of them goes under. It's a whole fund of financials, and should they all rally, you do very well. If one goes under and the rest don't go under, then you probably do okay. And as long as not all of them go under, which I don't think will happen, you probably be okay. But nonetheless, I'm still not sticking my neck out here. It's just not worth it. Maybe on the XLF, if I really see a double bottom here and we really see a flush out, maybe a little lower. I'd like to see this low from this point broken, and then you see a double bottom lower low, which is my favorite play for a double bottom or some sort of pullback. You want to see the Pierce. Pierce gets the weak hands out by making them scared and dumping, and then you're there to pick up the pieces afterwards. So we'll see. Again, I'm not sure if I'm going to look for that play, but I'm going to keep an eye on it. It's on my watch list, as they say. All right, so we'll continue just to look across the board, but nonetheless, guys, let's take a look at the daily charts of the SPY now, and I want to show you this. Here's that area, that double top area on the SPY, and you guys can see what happened here. Nonetheless, the markets have come off their highs ever since then, and you've seen a good sell, and the biggest sell by far was Friday of late. That was the biggest drop we've seen on heavy volume. Look at the volume there. And that's a signal that this market isn't quite ready to rally again. And that's what we've been talking about. So again, we're going to maintain our neutral bias because the volatility and the craziness of this is going to really, if you're not neutral, if you're long or short, there's a good probability that you'll get wish-washed out, and unfortunately your stop will get hit. And any trader that doesn't use a stop is absolutely insane, in my opinion. You've got to use a stop, whether it's mental. If you can hang by it, you want to use mental stops. If you can't abide by a mental stop, you have to use physical, because every trader is going to take losses. I take losses. Everyone takes losses. Some of us may take less than others. The more pro traders take less losses, but the key is to keep them small. There's no trader out there that's never taken a loss. If they do, they're lying to you. All right, folks? So keep that in mind. And again, come join the intraday stock chat and the E-Mini chat. We go over constant resistance, supports, you name it, technical analysis galore in that chat room. Going over Apple today. It was fun. You name it, we're calling out plays, different plays to watch, different plays that we're in. We did enter a position that we're holding overnight, and I'm not going to unveil it in the chat. You got to come join the chat room to see what swing trade we're holding overnight. But it does have something to do with the oil